This is the World Financial Report podcast. My name is Randy Marshall. Joining us via the car as he heads off to a business engagement, our financial and diamond expert Harold Siegel. We're taping on August 30th, 2018. Our time is 8:07 Mountain. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Labor Day long weekend in the United States and Canada. My mother's birthday today, so happy birthday to my mom. Be getting together with her for dinner a little later. Look forward to that. Now the markets. US dollar 94.71. Canadian dollar 77.03. Euro 116. That's 1.16. Pound 130. That's in US dollars. Gold 11.9920. Silver 14.50. Gold-silver ratio 82. Platinum is 788. Palladium 965. WTI 68.80. Brent is 77.58. Nat gas 288. Bitcoin in US dollars 68.45 and Bitcoin in Canadian. The lucky Chinese number of 888. $8,888. The Dow at 26,083. S&P 2914. Nasdaq 8,085 and TSX at 16,390. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Get the companion to our podcast, and that is our free weekly newsletter. It has all the information that you will definitely hear us talk about on the podcast. We're going to do a little shorter podcast today. It's a long weekend as well. Harold, as I mentioned, is in his car. And speaking of cars and hard assets, a rare Ferrari 250 GTO sold for a record $48.4 million at auction. A red 1962 Ferrari 250 GTO sold Saturday in Monterey, California, the most ever paid for a classic car at auction. The vehicle was offered by RM Sotheby's in Monterey and was estimated to be going for around 45 to 60 million, the highest valuation ever for a vintage auto at auction, and it smashed the previous record of $38.1 million paid for a 1963 model of the same car in 2014. The seller was Greg Witten, chairman of Numerix, and that's a software company, an early Microsoft employee, and he purchased it in 2000. Now, they did not say how much he purchased it for, but the belief is that he picked it up for around $10 million. And Harold, it's interesting because we have in our free weekly newsletter a chart, and this is from Bloomberg. Vintage Ferrari investments would have returned more than U.S. stocks. Well, the S&P 500's index bull market run has commanded headlines of late. It turns out an old Italian roadster was the more lucrative investment. Hagerty's index of the price of vintage Ferraris has nearly tripled during the past decade, outpacing U.S. stocks, which are up about 150% over the same period. Those that are buying Ferraris and have the money to do so, 10 million, turning it into a nice chunk of change. We're talking about $48 million. Harold, this is a very good investment, a hard asset like a car, like diamonds, like gold and silver and art, handbags, watches, whatever is a hard asset, now's the time to be in it.
You better believe it, Randy. What an unbelievable result. Paying $10 million in 2000, did you say? 18 years later, selling that for $48 million is unbelievable. But we've seen cars, that classic cars, have gone up tremendously in value, as has diamonds, as has art. Even though that the stock market is hitting records almost every day, people are basically still looking at other investments. Now, obviously, with the stock market over 26,000, people are starting to get a little bit nervous. We have seen no pullback in that market since it took off in 2009. When it basically went from 14,000 to 6,500 all the way up to 26,000 and change. We've literally seen a 20,000 point increase in the Dow with really no pullback whatsoever. And that's at a time there's huge concerns in the market. Biggest concern obviously is debt. Basically in all intents and purpose, there's no way in the world that those trillions and trillions and trillions in debt that the US is in can get paid back at this point. I'm sure that the game plan was to improve the economy, get more people working, get more people paying taxes, and that's going to help cut down with the deficit. However, there's been other factors that has really offset that. One is a higher price of oil. And number two, inflation is moving higher. The other situation, obviously, is interest rates are going up. So interest rates rising at a time when the debt is the highest it's ever been in history is not a good scenario. But the stock market keeps on surging on. But people that have $48 million to spend on a Ferrari or $50 million to spend on a diamond, they're spending that money not just because they want to play with a Ferrari. The fact is, it's a great investment. 10 million to 48 million over 18 years. There's very few investments that could rival that type of return. And we've seen similar returns in diamond auctions that we brought to you, in the past type of thing. So it just goes to show you that diversification is extremely important. And at this particular time, again, with the stock market over 26,000 and the trouble that Trump is having, along with the fact that there's a potential trade war with China, on top of that, inflation's moving higher, so you've got higher interest rates coming. And all these scenarios together, along with the debt, it spells for a very, very dangerous market. And that's why, investors are willing to take 48 million or 20 million or whatever the dollar figure is and diversify their investments into something that they're going to enjoy. Let's face it, the biggest joy that you get out of owning a stock is if that stock goes up in value. But it's not something that you can put on your wife's finger. It's not something that you can get into and drive for the pride of ownership. It's a stock certificate. It's an investment. It's not something that you get emotionally attached to. But with a hard asset, that's a totally different scenario. So again, it's great to see, Randy, that those type of numbers are being hit on a Ferrari. Now, it wasn't that long ago at the same auction that we saw another Ferrari sell for an ungodly amount of money. So again, I'm very happy to see that's actually one of my favorite, if not my favorite, classic auto show. And every year we get to see some amazing, amazing returns like we just saw this week.
Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Chart of the week in our newsletter. American companies are raising prices at a brisk pace. And you know what that means? Inflation. Inflation good for hard assets. President Donald Trump is giving many businesses an unexpected benefit on top of lower taxes and regulatory relief. He's helped to restore their purchasing power by pouring hundreds of billions of dollars of tax cuts and extra government spending into an already stretched economy. Trump is fostering an environment where firms such as conglomerates like 3M can raise prices because demand for their products is strong. The power is with the seller, according to Chris Williamson, who's the chief business economist at the consultants HES Market Limited. That's a turnaround from the past decade where executives often bemoan their inability to raise prices because of fear of sacrificing sales. The shift will help them pad profits that are already surging thanks to lower taxes. It's also good news for the Federal Reserve Chairman Jerome Powell and his colleagues who have struggled to lift inflation past 2% and hold it there. Policymakers took note of that in a report that came out on July 31. It's going to be good for hard assets, particularly gold, silver, and diamonds. If we start to see some inflation come through, what will happen to the hard asset market? We suspect it will be something that will be a lift for gold for sure.
I think so too. Gold's hovering around 1,200 now. We've seen a sizable decline in the price of gold. We've talked about this before. The major resistance level for gold is all the way up at 1,380. It wasn't all that long ago that we hit 1,370 and we thought that we were going to break 1,380 in gold. However, they pulled the market back. It's now trading at 1,200 today. It's been as low as 1,180 last week. So the fact is that here's the numbers for gold. The major support level for gold, where it'd be very, very difficult for gold to break below this number, is 1,050. And the reason that that number is important is that in 2011, when gold rallied all the way up to $1,920, we know what happened at that point. The price was manipulated down. They raised the margin requirements in the futures market. The price plummeted from 1920 all the way down to 1,050, and that's where the market stopped. So at 1,050, there's heavy support. It would take a lot for the gold market to drop below that price. On the upside, it has to break 1,380. You're talking $330 difference in the price of gold uh, as far as the spread goes. And the fact is, that's a very big spread to wait for for the market to determine which way it's going to go. If it would have broken 1380 and closed twice above that, we would be talking totally different now. But now we're back down to 1200, 1180 in that area. We're actually much closer to the 1050 level. Now, what could push the price of gold down to 1050 is if we got a strong surge in the U.S. dollar. However, at this point, with all that has happened with Trump in the last couple of weeks, and his lawyers and other people within his little clique, getting into trouble and starting to talk about what he's done, there's talk of impeachment. I highly doubt that will happen, but there's a lot of controversy in that area. That could cause a lot of problems with the market. You would have thought that would have stabilized the market much more. But if this continues, what it could actually do is put a lot of pressure on the US dollar. Because if Trump ever did get thrown out of office or impeached or whatever could possibly happen, if that did happen, the markets would react. The market would plummet for a short period of time, more than likely, realizing that Trump is gone and Pence would be in. We could see the dollar weaken tremendously. So if that did happen, we could literally see gold take off again. That's why you never want to be out of the market. We're not trading the gold market at this point per se. On one hand, I'm giving you the parameters to buy and to look for, buying opportunities in gold. And again, the closer you get to 1050, obviously, the better the scenario. But what happens if we wake up one morning in the very near future and all of a sudden Trump is impeached, or there's a full-fledged trade war with China, and next thing you know, China's dumping our bonds and all hell is breaking loose? Well, all of a sudden, we've seen this happen before. Markets can react in a very, very dramatic and volatile way. I haven't sold my gold. I still own it because, again, we're not trading it. We are holding gold as a hedge against everything bad that could happen, and that should have been happening. Because the fact is that when gold hit 1920 back in 2011, it was an 11-year bull market. The biggest bull market we have ever seen in history was in gold. During that particular time, where it went from $250 all the way up to $1,900. Then it was brought back down purposely because higher gold prices signify that there's still problems with the economy. So anything could happen. The stage is set for something to happen, and it would not shock me in any way to wake up in the foreseeable near future and see gold running and see the stock market and the US dollar plummeting.
Connect with Harold. Learn more about investing in hard assets. RareColoredDiamonds.com. Telephone number 1-800-432-1022. We have some information that is quite contradictory. American consumer confidence rose in August to the highest level in 18 years. That's good news. But we also have a story, despite a strong economy, about 40% of American families struggled to meet at least one of the basic needs last year, and that includes food, healthcare, housing, or utilities. The average American is very, very concerned about their retirement. The vast majority of Americans, 78%, say they're extremely or somewhat concerned that they have not saved enough money for retirement, and for good reason. A shocking 21% of Americans have nothing at all saved for the future. Another 10% have less than $5,000 tucked away. So you can see with these stories, consumer confidence at an all-time high, 40% of people struggling to get by, and 78% saying they're extremely or somewhat concerned about not having enough money for retirement. Harold, you put all that together, it says to me that even with the economy booming in the United States, there are concerns because the average everyday person is still hurting on some level.
Oh, you better believe it. Again, when you've got 40% of the population concerned that they don't have enough money, even close to enough money to retire, and I'll tell you the exact reason why this happened, was the huge drop in the stock market in 2009, because stock market was priced accordingly at that particular time. The Dow was at 14,000. The middle class was doing okay. The middle class was able to have an RSP, money put away for their retirement that was in the stock market. and then the Dow plummeted by 50%. And it knocked all of those guys out of the market. And they could never get back in because they lost all their money. So the fact is that it was a drop in the stock market in 2008 and 9 that totally killed the middle class. And the fact is that they will never, ever get back into the stock market because they can't afford it. At 26,000 right now, only the wealthy can afford it. You can't afford to buy Amazon right now. You can't afford to buy Google or Apple or any of those major stocks. Even Bitcoin at $20,000. I mean, you could have bought Bitcoin 4 or 5 years ago at zero, at $1 or $2 or $5. It went all the way to 20,000. So these markets have outpriced the general public. The only people that can really afford to invest are the wealthy, and the hedge funds. So basically, the middle class is done. They're not going to be able to retire in the way that they want to. There's not going to be anywhere close to the amount of money that they're going to need in order to retire. So yes, I believe those figures are true, but it's sort of difficult to understand how consumer confidence could be at an 18-year high when 40% of your population is in trouble financially.
One of the hot topics here in Canada, marijuana. This week, RBC Capital Markets is trying to address investor anxiety surrounding the marijuana industry. It's a brand new industry. The bank says Constellation Brands' recent investment in Canopy Growth is exactly the type of move that more companies should be making. RBC estimates that the U.S. legal marijuana sales market could reach $47 billion in the next decade. There was a survey done that came out during the week. 1 in 7 people used marijuana in 2017. American investors piling into a marijuana ETF. It's worth about $436 million at this point. It's known for its ticker MJ. It brought in $22 million in August. Pot is still very hot in Canada and the United States from an investment point of view. But Harold, one thing that was pointed out during the week, these companies are not making any money. If you're not making any money, what is your company worth? Really, it's worth nothing other than the goodwill that people are willing to pay for, with the hope that somewhere down the line you will be making money based on your concept. But at this point, a lot of people are taking a huge leap of faith, hoping that these pot companies will be profitable at some point. They're still losing tons of money, and people need to be very, very careful, Harold.
You bet. Again, it's a little bit confusing, but until the federal government approves pot, marijuana, the banks are never going to accept it. Still illegal. If you're a football player in Denver, legally you're allowed to smoke pot in Denver, but you're going to be banned, thrown out of the league, or suspended, for a period of time if they found out that you did smoke pot. So until it gets to a federal level and the banks are comfortable taking that money in, I just don't see that being. It's not something that I invested anything in I looked at it, but didn't even consider the fact that it's going to be a huge winner based on the fact it's not federally approved. And until that happens, all you're dealing is in the total cash business that is going to be a problem down the road. So again, it's something that at this point I took a pass on.
Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Couple of things before we end the podcast. NFL season starting very, very soon. And if your name was Aaron Rodgers, quarterback of the Green Bay Packers, it was a very good Thursday. Blockbuster 4-year deal, $134 million, $33.5 million average. And they're saying that he will get approximately $80 million to $90 million in the next 12 months as the contract was front-loaded. But Aaron Rodgers getting paid. And you can see when good quarterbacks are in their prime, this is the kind of money that they command. It is absolutely massive, massive money, Harold. Tom Brady and people like Aaron Rodgers, I have no problem with them getting that kind of money.
Well, again, congratulations to Aaron. He certainly deserves it. The fact is that most NFL players have less than a 3-year career and get hurt and don't get a chance to make any money. So with the owners making billions and billions, it's guys like Aaron Rodgers that makes that happen. So congratulations to him. I would like to wish everybody a very beautiful long weekend and a very, very profitable day.
One final thing, Harold. History has been written in Regina. Brooke Henderson becomes the first Canadian golfer to win the Canadian Pacific Women's Open since 1973. Just 20 years old. She's been on the tour since 2015. 3 years, won 7 tournaments. And there are only 2 other golfers ahead of her, and they have won 10 tournaments. So congratulations to Brooke Henderson. She said it was her Stanley Cup, winning the Canadian Pacific Women's Open, and it was great to see. Congratulations to Brooke, a Canadian doing well on the LPGA. Harold, thank you very much.
Big fan of hers. She's great. Represents Canada very well.
And that is it. We did it. Yes, we got through our podcast as Harold was traveling to a business event. And connect with him. Enjoy the long weekend, Labor Day long weekend. Safe travels. Speak with Harold at rarecoloreddiamonds.com or 1-800-432-1022 to learn more about hard assets. Ask him about blockchain, also Argyle Pink Diamonds. rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We will talk to you next week.